Well, I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity. I think the most important is the consumer has to stay healthy, because right now we're seeing this huge divergence, right? Like the UMich surveys show banana level inflation expectations, but they're realized is low. If the consumer gets super cautious and retraces, then we have a recession. So I think it does come into consumers have to stay confident and keep their jobs.
Tom Lee kicks things off by tackling the latest headline, the U.S. credit downgrade. But in his view, there's not much real impact here. As he explains, the bond market already reflects the reality that the U.S. hasn't been a true AA-rated borrower for years, ever since S&P's downgrade back in 2011. Moody's downgrade might be making news now. But according to Lee, the market has long priced in the shift and nothing has fundamentally changed. If you're finding this breakdown insightful, make sure to hit that like button, it really helps the channel. Don't forget to subscribe and turn on notifications, so you never miss an update on the latest market trends, crypto developments, and everything in the digital asset world. We'd love to hear your take. Drop your thoughts in the comments below. Your support keeps this content coming. Thank you, and enjoy the video.
I don't know if there's much signal in the downgrade Friday, because I think the first AAA downgrade was signal from 2011. I don't think Moody's had any information that we didn't have on Friday afternoon. So I think markets should realize the bond market largely priced in the fact that the U.S. is really not AAA anymore. So I'd be viewing this as a buying opportunity.
That said, you're not discounting the notion that the vigilantes have been reawakened a bit?
I think everyone should be aware the U.S. has an unsustainable path for debt, but I think the real signal will be when an auction fails. That happened a few years ago, and then we realized that was the time to really pay attention to the fact that we have debt sustainability issues. But I think a downgrade itself, I don't think it is much signal.
So we reclaim the 200-day. Is that a clear path to a new high, as some of the trading desks suggested this morning?
Yeah. In fact, I think today will be an interesting test. I'm assuming today's pullback's going to be really shallow, might even close positive, because most investors rage sold at the bottom in April, and then they doubted.
I hadn't heard that.
Yeah,
that's a good one. Is that your own, or have you heard that other places?
I've heard that. Yeah.
Rage sold.
Yeah.
Sorry, go ahead. Continue.
And so as the markets climb, a lot of people sort of doubted, thought it was a rally that would fail, and so I think there's $7 trillion cash on the sidelines, enormous skepticism from our institutional clients. A lot of folks sort of bet outside the U.S. So I think there's going to be a lot of chasing into year end.
Although, a lot of shorts have been covered already, though. A lot of the hedge fund guys who actually got it wrong and rage sold, to your point, are in a very different position right now in terms of positioning.
Yes. No, and there's a difference between being short and versus having positive beta to risk assets. So I think most people might be flat on their books. But if the market is above its 200-day, showing this sort of impulsive buying, and you're flat, that means you're underinvested.
How are you evaluating potential changes in tax policy? Obviously, the market has been very reactive to any headlines on tariffs. What about this one?
In fact, I think as we start to think about 2026, and it makes sense because we're in the mid-year, there is not only tax policy that can be a tailwind, it looks like it's going to be, but it's deregulation.
Sure.
I mean, several published pieces show that regulatory cost for U.S. companies is over $2 trillion, maybe as much as $3 trillion. It's a bigger deal than the tax cuts itself.
Yeah, obviously we've been waiting for some time about the regulation. So in this environment, the ever bullish Tom Lee, what are you looking at when it comes specifically to the Magnificent Seven? We watch those so carefully, but the Nasdaq, of course, under pressure here today.
We think the Mag 7 is going to lead into year end because it's a group that fell first. It was widely owned, but it really got washed out. I think Tesla was a really good sort of case study. So I think the Mag 7 is going to reclaim its old highs. That's, of course, why the S&P should regain its old highs and of course, actually move above that before year end.
And what about financials? That's obviously an area that so many people were looking to early on. Is that still on your radar?
Yeah, financials are important. You need the banks to rally. They have been. If I was going to make a case for multiples expanding, financials is one place because not only did they prove themselves actually pretty resilient during Fed hikes and during this turmoil, but they're kind of more tech-intensive companies with better credit profiles. So I think multiples should go up.
If we do revisit the highs, what needs to happen to push past that? I mean, how firm of resistance will it be?
Well, I think investors have to look past tariffs because if we're only trading tariff headlines, the markets are going to be range-bound. But again, as I look at 2026, I'm looking at companies that are battle tested. They survived the tariff headlines. There might be freer trade. That's an upside to earnings.
Freer trade than we thought.
Yes, than we thought, yes.
But earnings estimates have come down, have they not?
Yeah, but they're going to flex in both directions, meaning I think if we have deregulation, possible improved ability to export, tax cuts, that actually all supports higher earnings. But I also think the multiple for the S&P should be going up because, again, we've taken away a black swan event. I mean, we did, the April to February to April period was a black swan for.
Do you think the downgrade hurts the push for tax cuts?
I think it's going to have almost no effect.
No effect?
Yeah, because at the end of the day, the bond market prices what they think the rating should be.
I don't mean a market from the market standpoint. I mean from the political optics standpoint.
Yeah, it might. But, at the end of the day, the U.S. really wasn't AAA anymore because it was only 1 out of 3. So it's like not even a split rating, AAA.
So, Tom, is there anything out there? I mean, and to be fair, you've been bullish throughout. You were right during this period when a lot of others sort of, whether they rage sold or just got upset in general. But what, if anything, is top of mind for you in terms of concern?
Well, I think the most important is the consumer has to stay healthy because right now we're seeing this huge divergence, right? Like the UMich surveys show banana level inflation expectations, but the realized is low. If the consumer gets super cautious and retraces, then we have a recession. So I think it does come into consumers have to stay confident and keep their jobs.
And so you're a believer in the data versus the sentiment?
Yeah, at the moment, this divergence between inflation and realized is actually the largest, I think, ever recorded for UMich. And so I would say as long as inflation doesn't explode, then the consumer has marginally a chance to become even more positive.
Toward the end of the discussion, Tom Lee shifts focus to the crypto and NFT space, and his enthusiasm is contagious. He sees a strong resurgence in NFTs not just as collectibles, but as the early building blocks of true Web3 consumer brands. Projects like Pudgy Penguins, Doodles, and XCOPY are no longer just niche, they're becoming real, thriving ecosystems. Even iconic PFP collections like CryptoPunks and the infamous CryptoDickbutts are drawing serious institutional attention. Lee even jokes that owning a punk is now a rite of passage. In crypto, a digital badge of honor in the new economy. But that's just the beginning. Up next is Raoul Pal, who takes the conversation even deeper. He breaks down the macro forces driving this digital renaissance, from the tokenization of assets to the exponential impact of network effects in the crypto space, markets, exponential technologies, and the rise of digital ownership. Trust us, you don't want to miss this. Let's watch more clips from the interview.
I think we do have an NFT season.
Yeah.
Somewhat different than the last. I think what we're seeing is a current bifurcation. One is Web3 consumer-based brands being built. And, we'll talk about what you guys are doing.
Yep.
But, that's Doodles, Pudgy Penguins, all of that, right? And that still seems to be capturing mind share. Then we've got the art side, which seems to be doing well. Then we've got the PFP side, which, there are a few projects that will survive. And punks, going to the hands of Mickey Malko, is a good friend of mine, is amazing news. I managed to get the head of the Sui Foundation over drinks one night in Dubai at 11 o'clock at night to get a punk. I said, the reality is you cannot be in the space and having been reasonably successful without owning a punk, right? It's a rite of passage. Yeah. And so, I think punks probably get to a floor price of $500,000 this cycle, just because there's a lot of OGs who haven't yet bought them.
Yeah.
I was speaking to a bunch in Dubai, really well-known people. They don't have them yet. I'm like, how can you? I mean, I've been speaking to Vlad Tenev from Robinhood. In fact, the last question of my interview with Vlad, because I've been talking to him privately, is like, when are you buying this fucking punk? You can't be in the space and pretend you're in crypto without a punk. And then, what is the spillover effect from that? I know we've talked about this in the past. I think CryptoDickbutts is another one. You're either an OG and understand it, or you don't. And there's only 5,600 of them there. They're 1 ETH, 1 ETH 25. I just do not see a world that these are not 10 ETH, because they're so important to the space. Because you kind of know, right? Everybody's got a dick butt. You're like, yeah, you get this space. It's like a mini punk.
Yeah.
So I do think we'll see PFP projects maintaining value, certain ones that have Lindy effects. And I think that's good too. I think what XCOPY has done is so amazing because he's got such a broad spread of assets that people can buy, from Max Payne and Friends as a PFP, which is cheap, through to the one of ones, and people can participate throughout his ecosystem. So I do think the art stuff continues as well. So, and then we're going to see somebody do something breakout, which is somewhere between I still think a hybrid idea behind memes and what NFTs actually use as technology. People aren't using NFT technology much yet. They're just using it still for pictures, but there's a lot I think will happen. So I think the NFT space is going to get interesting. And I think some of it will be on Solana. We've seen a bunch of stuff migrate across to Sui as well, because they're faster throughput, so they're more like memes in that way. But we'll also see stuff accrue on ETH. So I think it's a broad mix. That XRP chart is something to behold.
Yeah,
it really is. I mean, none of us have really been involved in XRP, but that chart is something to behold. It's like that's going to another big leg higher at some point. And that obviously helps the Bitcoin dominance chart. The other one, which I think is the best chart in the world, is I don't know if I've got it on this one, is Doge Bitcoin. I've got the Doge chart, but Doge Bitcoin looks like it's going to continue. And Doge Bitcoin would suggest that it's going to outperform Bitcoin again, in which case it'll have been the hardest asset in the world.
Yeah.
Which is the funniest outcome. But Doge itself, like, put this.
That looks like a full sort of breakout mode, doesn't it? This chart here.
Yeah, if I go to the monthly chart, I mean, it kind of can't be better than this chart.
Yeah.
It just does the same thing every time. Consolidates, does nothing, alt season. Every time.
Yeah.
And so this looks like a rocket. And before you know it, Doge is somewhere up here.
I mean, that's a very interesting chart, I think.
It really is. And it's the same as XRP, essentially. So it's telling you that's the retail participation. They come on, look down the top 10, 15 tokens. What looks cheap in price?
Yeah, what's not Bitcoin, exactly.
What's not Bitcoin? What's cheap in price? Have I heard about it? Go for it.
Raoul Pal wraps up with a bold and unexpected call. XRP and Dogecoin could be gearing up for another major breakout. He zeroes in on the Doge BTC chart, pointing out a striking pattern: periods of quiet consolidation that have historically been followed by explosive upward moves during altcoin seasons. According to Raoul, Dogecoin may once again outperform Bitcoin, potentially making it ironically the best performing asset of the cycle. This kind of retail-fueled momentum, he argues, is a clear signal we're entering a new alt season, where risk appetite is surging and speculative capital is flowing back into the crypto markets. It's not just about memes anymore, it's about market psychology and timing. If you're excited about what's coming, smash that like button, it helps us reach more people like you. Don't forget to subscribe and turn on notifications so you never miss these timely insights. Are you watching Dogecoin, XRP, or another altcoin? Drop your picks in the comments, we want to know what you're tracking. Thanks for watching and stay tuned, see you on next video.